Ja, då har vi ett nytt bolag på scen, Sintercast. Warm welcome.
Thank you. So good morning and thank you. We've been here with Aktiedagarna a few times before, so let me just start with a short reminder of what Sintercast is. So we've developed a technology to enable the production of a new type of iron called compacted graphite iron. CGI is stronger and stiffer than the conventional iron, and the main application is for engines. So with the higher strength and stiffness, we're able to increase the pressure and the temperature inside the engine, and that makes for a more efficient burning of the fuel. So we have more power and also more fuel efficiency and less CO2 emissions. So engines made with our CGI are smaller and lighter. They're also cleaner and more fuel efficient. And our main application is in large vehicles, and I'll show that in the next slides. So these large vehicles necessarily use a lot of fuel, and that allows us to make large CO2 savings. We're not a manufacturer. We've developed the technology, and we provide the service to the foundries who produce engine castings. So think of us more as a software and a service provider. We have a royalty-based business model. Approximately 95% of our revenue is recurring. 2/3 of that come from a production fee that is applied to each casting produced. And the other 1/3 is from our sampling consumable. You can see it there in the picture. It's about the size that you can hold in your hand. And we currently supply about 200,000 of those per year. It means more than 500 per day. Yeah, so it's all developed into high volume production. So that's what we do. Let's look at what we've achieved, what we've done. So it's a proven technology. Our first high volume production was in 2003. We started with an engine for Ford and an engine for Volkswagen Audi. Our technology is currently used in around 1.5 million engines per year. Put that in perspective, that's about 5 times more vehicles than are sold in Sweden each year. So again, really high volume, proven technology. Our technology is highly scalable. We've been able to grow the production without increasing our headcount. We're only 27 people, primarily based here in Katrineholm. We have a revenue of approximately 5 million Swedish crowns per employee. Our profit is about 1.5 million crowns per employee. And we have an operating margin of more than 30%. So last year we finished at 31.8%. And in the first 3 quarters of this year, we were 33.8%. And we'll continue to grow that. We'll get it above 40. We have a track record of double-digit growth over the last 10 years. It's about 9% compounded annual growth. And over the last 15 years, about 15%. We gave our first dividend in 2010. So we've had 14 consecutive years of increasing the ordinary dividend. And as I said, we make the engines cleaner. We are currently avoiding approximately 10 million tons of CO2 per year. And our cumulative contribution over the last 20 years of production is now 66 million tons. And again, we can put that in perspective. The entire Swedish domestic transportation sector emits about 14 million tons of CO2 per year. So it's a really significant contribution. This is a breakdown of our current production. We have approximately half of our production for big trucks, and that's our largest growth opportunity, so we'll focus on that today. About 30% from Super Duty pickup trucks in North America. 11%, it's related to the Ford F-150. It's the largest best-selling vehicle in America, and we do the base engine on that vehicle. 5% for mid-size pickups and SUVs. Think of the Ford Ranger and the Volkswagen Amarok. They both use our technology. And about 4% off-road. So as I said, commercial vehicle is our biggest, and it's our biggest growth opportunity. So let's look at that in more detail. Scania is our largest commercial vehicle customer. They use our technology for 3 of their engines. And this year they won the Green Truck of the Year award with our engine. And what I want to say about that is that Scania said that their new engine is 8% more fuel efficient than the previous generation engine. So I want you to remember the 8%. We're going to come back to that later in the presentation. Also in September in Hanover at the International Truck Show, MAN won the Truck Innovation Award for 2025 for an engine that uses hydrogen combustion. You can see the red hydrogen tanks on the back of the vehicle. Again, that uses our technology. So it doesn't really matter what is the type of fuel. All of the different fuels can be used with our engine material. The real question for heavy-duty trucks is, what will the future be? We hear a lot about batteries. We hear a lot about fuel cells. And of course, today engines are dominant. And those engines can run on diesel, fossil diesel, or natural gas, but increasingly renewable fuels. And this can be biodiesel. It can be renewable natural gas, renewable diesel, which is approved in North America, maybe HVO, treated, used cooking oil, and also hydrogen. Yeah? And it's obvious that we can't have vehicles that ultimately run on dirty fuel. It's clear that we can't have electric vehicles that are running on electricity produced by natural gas or fossil fuels. Yeah? And the same applies for fuel cells. We can't run fuel cells on hydrogen that's produced from fossil fuels. Today, more than 95% of the hydrogen produced in the world is made from natural gas. And today, there are 9 kilograms of CO2 produced for every kilogram of hydrogen. That has to change. We have to go to green hydrogen, clean hydrogen. And exactly the same is true for engines. Today they use diesel, maybe a little bit natural gas is coming on, but in the future it will be clean fuels. And what we see is that the industry will evolve from a discussion about engines to a discussion about energy. In the industry, we don't really say engine, we say powertrain. What makes the power? Is it a battery? Is it a fuel cell? Is it an engine? That's the mechanical part. The interesting question is, how do we feed it? And of course, we have to feed it with clean fuels. I predict that the discussion will also evolve over the next 5 years from decarbonization, which we discussed today, to defossilization. We can't use fossil fuels, but we can use renewable fuels, recycled carbon fuels. Let's take a look at where the industry is today, because that's the starting point for our discussion. And today in both Europe and the US, it is more than 96% diesel. Diesel clearly dominates. And we can see the breakdown with a couple of percent, but it doesn't really matter. Everything else today is peanuts. And how will that industry evolve? In the US, in full year 2023, the last year that we have statistics, they sold 276,400 heavy-duty trucks. 441 of them were electric. Yeah? And here, closer to home with Scania, who has been a strong proponent of electric trucks, they sold 96,727 trucks last year, and 246 of them were electric. So you see the starting point. Yeah? I want to discuss a little bit the past and the present and the future, and how Sintercast has evolved and how Sintercast has benefited from new emissions legislation. So this is showing a progression of emissions legislation. That's what really drives the engine technology in our industry. And we started with Euro 4 back around 2005. Today we're between Euro 6 and Euro 7. And the root of the solution has always been to increase the pressure in the engine, as I said earlier. Back in 2005 with Euro 4, the pressure in the engine was around 210 bar, and today it's around 250 bar. And as the engine manufacturers have increased the pressure, one by one, they've moved to stronger materials to make sure that the engine doesn't fail during the life of the vehicle. And that has driven our business. Sintercast has always benefited from new emissions legislation and will continue to do that with Euro 7 in 2028-29. So with Euro 4, DAF in the Netherlands made the first CGI engine. It was a real breakthrough for us. In Euro 5, more came on stream. DAF made a second engine, MAN in Germany, Navistar in the US, and Hyundai in Korea. With Euro 6, the pressure went up and still more came to CGI. Scania, we started our first engines with them in 2013. Daimler, Hyundai in Korea made more CGI engines. And today, we are ramping up new engines for Traton, which is, of course, Scania, MAN, Navistar, and Volkswagen, and also for First Automobile Works, FAW, in China. Yeah? And what it means is that today, after this development, something between 40 and 50% of the new commercial vehicle engines are produced with CGI. And what we know, because it takes 4 years to develop a new engine, we know very well what's going to happen between now and 2028, 29. And we see that CNH has recently started talking about their Euro 7 engine, and others will come on stream. And we know that we will grow from around 40 to 50% CGI in the market to something around 80% in the market. And there's a wonderful quote. You can see that it's just from 27 October. This is CNH or Fiat powertrain. You'd think of the Cursor engine, the Iveco trucks. They say, one common innovation FPT chose for the XC13, it's the new generation 13-liter engine, regardless of fuel type, was to migrate from standard castings for the cylinder block and head to compacted graphite iron. This enables us to be lighter, but also more rigid. So that aids emissions and also the amount of cylinder pressure that we can maintain. Yeah, it's exactly the story I've been telling. The improvements FPT made reduced weight by about 10% on both the diesel and natural gas models compared to the current generation C13 engine. He goes on. Compared to the C13, these and other improvements in the XC13 have resulted in a more than 2% increase in power and 12% increase in torque in the diesel version with a corresponding 7% decrease in fuel consumption, just like Scania, 8%. Yeah, that's the level of fuel saving that we can contribute to. The natural gas model saw increases in power and torque of more than 9 and 10% respectively, with a fuel efficiency improvement of about 8%. Yeah, so that's the contribution of CGI, and that's why it has been growing and will continue to grow. I've been beating this drum for a long time. I'm not sure that I've made a lot of progress. So what I decided to do today is to use some of the executives in the auto industry. So bear with me while we look at some quotes from different executives. This is the chairman of Toyota speaking to a group of Japanese businessmen back in January. Everything that I show now is going to be from this year. He said, no matter how much battery engine vehicles progress, I think they will have a market share of 30%. The remainder will be hybrids with engines, fuel cells, and hydrogen combustion. I have no doubt that engine vehicles will survive. This is the largest car maker in the world. Here I've taken some news clippings. You see in the first one, Ford was planning to develop a new plant for a large SUV, electric vehicle, and they shifted the plant. Now they will use it to produce Super Duty pickups. Great news for us because we do the Super Duty. Yeah, so hopefully more capacity, more volume for us. GM, over the past week, committed to spending more than $2.3 million at plants that build large gas-powered pickups. In February of this year, Mercedes-Benz delays electrification goal and beefs up combustion engine lineup. They say that they were going to prioritize profit over electric vehicle targets. Mercedes share price went up 5.4% on the day. And Ford F-150, again, the most popular vehicle in America. They have an electric version of it called the Lightning. It started with 3 shifts of production. It changed to 2 shifts, then to 1 shift. And now they've announced that from the 15th of November to the end of the year, they will idle the production. The demand just isn't there. General Motors said that they have such good battery vehicles that they'll be able to go directly from combustion engines to batteries. And they've had to back off of that. So in a reversal, they will go to plug-in hybrids, again, using engines. 92% of the vehicles in America have an engine. I wanted to show this one. It's a little bit closer to home. This is a quote from earlier this year. And you can read in the red text, Volvo will not sell a single car that is not fully electric after 2030, regardless of the market. There's no ifs, no buts. And then you see on the front page of Automotive News 1 year later, the headline story, downshifting, Volvo softens its all EV plan by using hybrids. And the text in the red I want to read. Volvo's US retailers said that they expect to sell gasoline power-assisted hybrid sedans, wagons, and crossovers well beyond the turn of the decade. We will have to, or we will die, said a dealer who requested not to be identified. Volvo has gotten way out over their skis with this EV-only strategy. Yeah. Two more, if I may. This is from the president of Ford. It's important for us because Ford's our largest customer. Ford uses our technology in 8 of their engines. And they asked him about the EV mandate for 2035. When asked about the possibility that the 2035 EV mandate will effectively kill off internal combustion engine models in a recent interview with Autocar, Farley said, "Are you sure? I don't think we know. When you need a transit for your work in Europe, or you're a rancher with a pickup in the US, electric power is a terrible solution. Maybe the solution will be hydrogen, or the sustainable fuel things is coming along. Whenever someone starts telling me that they know the future, I hear a warning buzzer in my head. There are no certainties in our industry. I've heard this stuff 1,000 times. So again, it's engines with clean fuels. And just one last one, bear with me. So this is from the Chief Technology Officer at Volvo Trucks, and he says, I think that we will need many different solutions. There is no silver bullet in order to decarbonize all road transport across the globe. We will need to have a little bit broader palette. I have 15,000 engineers, and they will develop the best technology to meet what you want to achieve, but don't ban technology. Stenquist said that this year, 2024, Volvo Trucks will spend more money on internal combustion engine development than ever before. They're not doing that to get to 2030. They're doing that for the next 25 years. That engine will start with diesel, it will then be used with renewable fuels, and it will eventually be used with hydrogen. And the base engine in all of those cases will be CGI. So wrapping up, 2 last slides. First, where is the industry going? Well, on the electrification thing, the challenges were underestimated. The timeline was overestimated. And the industry is now adjusting from the initial euphoria to reality. I remember when Sintercast was young 30 years ago, and a fund manager said to me, everybody has a hockey stick. And it's true. All new development, everybody has a hockey stick, but the hockey stick always pushes to the right. And it is doing that again, and we are witnessing it. I believe that the discussion in the industry will evolve from engines to energy. I believe that it will also evolve from decarbonization to defossilization. We need clean fuels, whether it is batteries, fuel cells, or engines. And of course, the long-term solution will be a mix. It always is. It always is. And so I wanted to show this. This is from the United States Department of Energy and Department of Transport, and they tried to make a map for engine technology or powertrain technology in 2050. And you can see at the top for cars and moving toward trucks and larger things like construction and agriculture and rail and marine. It will be a mix. There are icons for batteries, for hydrogen, which will be used for engines and for fuel cells, and sustainable liquid fuels. Yeah? And all of this is the Sintercast opportunity. And what we saw in the US election just a few weeks ago, what will happen from that is that some of those icons in column 1 will move to columns 2 and 3, and in all cases the timeline will push. So that's what the industry is doing. Let us just finish with where Sintercast is going. Typically, we have about 8 million Swedish crowns of installation revenue. We've had a really strong installation campaign this year. The pipeline looks really good for next year. So we see strong installation revenue in 24 and 25. Strong commercial vehicle growth will continue our double-digit compounded annual growth through 2030. And I will provoke the discussion with this statement. Between now and 2030, the absolute growth of CGI engines will be larger than the absolute growth of electric vehicles. Yeah? The electric guys are great at saying they have a high percentage, but they go from small to something a little bit bigger and they declare 50% growth, but it's still peanuts. And there will be clean fuels, and those clean fuels mean engines and Sintercast in perpetuity. We'll continue to increase our revenue. We have fixed operating costs. We're not going to increase our costs between now and 2028. We'll get our operating margin above 40%. We have a target for 100 million tons of CO2 savings. We're currently at 66 million. We'll hit that in 2027 or 2028. And perhaps yesterday you saw that we initiate our second share buyback campaign. And we will, of course, even with the share buyback, have continued dividend growth. This year will mark our 15th year of consecutively increasing the ordinary dividend. Thank you.
Thank you very much, Steve.
Thank you.
I start off with one personal question. For how long time? I think you have been probably the longest CEO on the Stockholm Stock Exchange. For how many years have you been heading Sintercast?
I started in 1991 as technical director. I was the assistant to the professor who invented the technology. Yeah. In 2002, I became CEO. So this is 23 years.
Yeah. It's strong. And it will be 20 more years, or?
My successor is here in the front row. Our plan is to make the change at the annual shareholder meeting in May of 2026, and I fondly hope to remain on the board after that.
Yeah, we hope so. Anyhow, if we start off with some questions, you didn't mention that much competition. What kind of competition do Sintercast have?
It's primarily foundries that try to do it by themselves without using our technology. I always say, sorry in public, but I always say we don't really have a competition problem. We have a Germany problem. Germany has a very strong foundry industry. We tend to support foundries in developing world, Brazil, Mexico, Asia. And it's very difficult for the German foundry industry to use the same technology while they have higher pricing. So they specifically say that they can do this without Sintercast, and that's how they differentiate themselves. We haven't been able to crack that nut. But today, about 65 to 70% of the world's CGI is made with our technology.
Okay. But big engine manufacturers like Cummins, for instance, are they a partner for you guys, or how is the industry?
Yeah, we've done 3 engines with Cummins, but primarily it's the OEMs themselves. So I think that by 2028, all of the major OEMs will be on our customer list.
Okay. That has to be the final word.
Sorry for being
Time flies. Thank you very much, Steve.
Tack. Thank you.